This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. It was a night of celebration in the US, especially for billionaires and men pushing extreme social and religious views. The decisive second coming of a Trump administration will free up new divisive narratives that will spill over globally. It's a great time to be a crony capitalist because your influence on a morally bankrupt president will be easy. There will be global economic consequences, most of them bad for trade and small countries. Markets have reacted that way already. Impending isolationism is raising the US currency, which will hurt their exporters significantly. Commodity prices are already getting a twist. Bond yields are rising, and sharply, and equity markets are rising on the sugar hit of expected lower taxes, ignoring for now the longer-term costs of much higher interest rates and much higher inflation, as new tariffs especially impose taxes on US consumers. The change in culture from a free, open society to one that will be bitter and vengeful will drive global consequences we won't like. But we'll have to find our way in a renewed thicket of imposed and imported bile. For a while, we'll have to live in a fact-free world. Economically, US mortgage applications fell 10.6% last week from the prior week, and that is their sixth consecutive retreat. They're now back to level pegging with the low levels of 2023 at this time. Mortgage interest rates rose sharply last week and are now likely to rise much faster in the future. Trump's spending plans could add $7.5 trillion to American deficits over 10 years, according to one estimate, far greater than the current track. US Treasury yields rose almost 50 basis points in October when markets were pricing in a higher likelihood of a Trump win. Inflationary pressures from Trump's policies will leave the Fed with less room to cut rates and keep Treasury yields elevated. The US housing market will be a loser. In fact, it is likely to be generally the case elsewhere because of sharply swelling US deficits. American car sales rose in October to be over a 16 million annual rate. This is another metric likely to be challenged by higher future borrowing costs. There was a US Treasury 10-year bond auction earlier this morning, again well supported. The median yield jumped to 4.57% though, sharply higher than the 4.32% of the prior equivalent event a month ago. Secondary market yields jumped as well, as investors foresee chaotic and unprincipled public policy starting in 2025. The Central Bank of Malaysia held its policy rate overnight at 3% for a ninth consecutive meeting. This was as expected. And the easing of deflation pressures in the EU turned in September to be worse, with their PPI down 3.3% from a year ago now. In Australia, the AI Group Industry Index retreated again in October with a sharp drop, especially for new orders. This index has indicated contraction for the past 30 months. The US Treasury 10-year yield is now just on 4.42% and up 8 basis points from this time yesterday. But the price of gold will start today at $2,667 an ounce, down $71 from this time yesterday. And oil prices are down 50 cents at $72 a barrel in the US, while the international Brent price is at $75.50 a barrel. And the Kiwi dollar starts today at 59.4 US cents and down 60 basis points from this time yesterday. Against the Aussie, though, we're unchanged at 90.5 Australian cents. Against the euro, we're up 40 basis points at 55.4 euro cents. That all means our trade-weighted index starts today at just under 68.7 and actually little changed again from this time yesterday. And the Bitcoin price will start today at $74,244 and up 5.9% from yesterday. Volatility over the past 24 hours has been very high at just on plus or minus 4.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.